please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. I am Reema Tendulkar. With me is Nigel D'Souza. And as you can see on your screen, the markets are off from their early morning gains. So the Nifty's lost about 60 points from the top of the day. So that's roughly about 0.5%. The bigger nick has come through on the mid-cap end, where the mid-cap index is down about 250 points from the top, or close to about 1.5%. So currently in the red. And the advanced decline ratio, which at least, till 1 hour ago was holding up marginally in favor of the gaining side or in an even keel, now has tilted in favor of the declining side. So there you go, the lines have crisscrossed. So selling pressure in the last 30 minutes has come through in names like an HUL, a Sun Pharma, as well as Bajaj Finance, and India Bulls Real Estate in the mid-cap end, as you can see on your screen. Hi, Nigel.
Well, Reema, till around 30 minutes back, things were looking very, very good. The 11,300 call, that had seen a lot of writing in Wednesday's trading session. That started unwinding. So that told you that, in fact, the bears are getting a little bit nervous out there. It shared close to around 5 lakh shares. Now, what's happened in the last 30 minutes odd is that the 11,400 call, that's become very, very active. Now, that's added close to around 7 lakh shares. That's telling you the bears, they're coming back in the game. They're writing that particular strike. So just keep an eye out on that one. And in fact, the 11,300 put, that's what's giving the bulls some kind of hope, because that's added close to around 6.5 lakh shares. The premium over there is around 62 rupees. So you keep an eye out on the downside. At Wednesday is low. So, something around 11,240, 11,230. That's the support for the market. So keep an eye out on that front. If that breaks, then we're heading straight to around the 11,000 odd mark. While a move towards 11,350, that should re-invite selling pressure, because 11,300 call was being written. The premiums around 50 to around 60 rupees. So on the back of that, those are the two broad marks we're looking at.
Okay, and I just want to highlight that Asia has actually picked up pace. So the Hong Kong market or the Hang Seng is now higher by 400 points. In the morning, it was up close to 250 points. The Chinese index is now up close to about 2%. And even the rest of the market are fairly high. So at the high point of the day, they've gone into their morning break. Individual movers and shakers. As you can see, we've got a full screen. Our entire team is here to join us at noon. Lata, the big casualty today, Yes Bank. And you also just want to throw in a word on the fresh developments in IL&FS and what you picked up from the SBI chairman.
Yeah, okay. Well, first on Yes Bank, because that's so much the focus of attention. If you read the spate of research reports, the fears mainly are, first, of course, uncertainty. What next? The second one is that he is an all-powerful promoter and CEO. So, whether without him, the company can go on at the pace at which it was growing, will it have to slow down, and the new guy and the new management team will have to put in fresh processes, because Rana Kapoor almost substituted for a lot of processes. A third and a bigger fear is what will be Rana Kapoor's own role? Will he be told not to be in the board itself? In that case, will he want to sell off? A fourth fear is, yes, someone comes in, but he is still at the beck and call of Rana Kapoor. A fifth fear is, when a new guy comes, do they kitchen sink? Which is the case that you have seen in other banks, especially public sector banks. So you want to just start on a clean slate, look very good. So you try to kitchen sink. These are all the various fears that's made people downgrade, and I can rattle off the numbers. Citigroup downgrades the target price from 440 to 270. They are downgrading the EPS. IDFC cuts the price from 350 to 230. So it's still lower than the price at which the stock is trading. They are cutting the valuation, not the EPS. Nomura has cut the price from 500 to 345, a very good price, but they say their bear case is 265. Deutsche Bank has cut it from 440 to 350, Edelweiss from 450 to 375, and Jeffries from 445 to 365. So you can see there are at least 4 or 5 brokerages who are still keeping the price around 350.
And even the transition time for Yes Bank is only 4 months versus 9 months, which was given in Axis Bank's case.
Well, in 4 months, you can select a new CEO. It's not impossible. But let's see how things pan out. I mean, what if the board came back very late and even the next list is not, amenable to RBI's liking? We don't know. It's the uncertainty that's killing the market. Now, the IL&FS story is could take a little while for me to narrate. It's a large 93,000 crore exposure. either by way of bank loans or by way of CPs and NCDs, non-convertible debentures. And it's coming at a time when the debt market is already in deep pain because of the rupee, crude, and the fact that several public sector banks are not lending because of the prompt corrective action list into which they figure. As well, 3 private banks, which we just discussed, change of management and therefore could be more risk averse. So it's already a very tight liquidity situation in which you have a fear of contagion. That is because ILFS has been suddenly downgraded from AA plus to BB to D. The fear is, are there others whom the rating agencies have not yet picked on? That's one fear. A second fear is redemption. A lot of corporates put money only in those funds which have AAA. Now suddenly one AAA has become, D, and the corporates are coming and asking for redemptions. A third problem will be with banks who could find, a large account like some 55,000 crores getting into NPA. Now, what makes the problem for me severe is that the hope in the market was the government will step in, tell the shareholders, LIC, SBI, they can't say much to Oryx and Abu Dhabi investments, they're outside, but they could tell them, force an issue, force some money in. But what the SBI chairman told us is, this is not a government problem. This is between the board, management and creditors. Creditors have to sit and, structure a resolution. Listening to what the chairman had to say, that also will exacerbate the debt market's fears.
ILFS is from the contagion effect point of view, yes, it is a risk, but for every problem there is a resolution, and I am sure that the board, the management, the shareholders of ILFS and its subsidiary companies, they will be putting their head together and work out a solution. I have to say that government has a very limited role in this to play.
Well, it's a Friday, but United Spirits is under some pressure. Nimesh is with us. Nimesh, it's not a good time for a drink, it seems. United Spirits, a cocktail of bad news actually coming in.
Nimesh and Nigel are not buying enough.
Yes, Nigel. So, in fact, I thought don't drink. I don't know about Nigel, but... So, 3 reasons why the stock is down in trade today. First and foremost, the parent Diageo came out with a profit warning yesterday, suggesting that they could see a hit of close to £175 million in terms of sales Y2D because of the forex volatility, and equally they'll see a hit of close to £45 million on the EBITDA level. So that's the first reason the stock is under pressure. The second reason is today Macquarie put out a note suggesting that in one of the key brands, which is McDonald's #1, they've cut the prices in Maharashtra by 6%. Now, it could be long-term positive because they'll gain market share, but in the near term, in FY19, Macquarie believes this can have an impact of close to 3% on the EBITDA. So that's the second reason. The third reason is there are some media reports suggesting that both VAT 69 and Smirnoff are banned in Delhi for 2 years. This is a long pending issue going on, but there is no resolution in sight. So maybe this pain will continue at least for the Delhi region for both VAT 69 and Smirnoff. So 3 reasons put together are the key reasons are the reasons why the stock is down good 5-6% in today's trade.
Okay, the problem for Friday is USL stock is down 5%. The problem for Saturday and Sunday is that drinks are getting more expensive. But let's move on. Sources have said that aluminium, metal and scrap import are totally non-essential in nature, with the Aluminium Association asking or seeking a 10% customs duty on primary aluminium and scrap. Anshu Sharma with the details. Anshu?
That's right. Aluminium Association of India constitutes of Vedanta, Hindalco and Balco, which are primary aluminium sector companies. They have sought increase in import duty on primary aluminium to 10% from 7.5%, aluminium scrap to 10% again from 2.5%, which is the current customs duty. And for downstream aluminium products like aluminium foil and others, the association has sought increase of 10 to 12.5% from current 7.5 to 10% import duty. Now, the association says that total imports have increased by 11% and domestic sales have declined by 12%. And for specifically by imports, shares imports increased 52% to 60% in starting the new financial year of FY19. So we'll have to wait and watch out to whether the government will take in these import duty suggestions in.
Okay.
and watch out for that fact.
All right. Okay, Anshu. A short point Anshu is telling us is that, there is an application made out there and they're asking for more protection for the aluminium industry, both upstream as well as downstream. But let's hop across to Sonal. She's joining in now. Sonal, you're in red and that's the color on Jet Airways as well.
Yes, absolutely in tandem, Nigel. And Jet Airways has some more problems coming in because we are told that IT department is conducting a survey operation on the Jet Airways company, and it is done in the Mumbai and Delhi offices. And we spoke to Jet Airways. They said and they confirmed that yes, there are IT surveys that are conducted in their offices. Apart from that, there is also a Mint report, an article which suggests that a consortium of overseas lenders are asking the company to expedite the payments for their overseas debt, and that amounts to around 1,050 crore rupees. And that is the kind of amount they want back on an immediate basis. The net debt of the company as in March 18 stood at around 8,500 crore rupees, and this is something that is mounting pressure on the stock today.
Okay, thank you very much for that, Sonal. And over to Anisha to give us many more stocks.
Good afternoon, Reema. Thank you so much for that. I'll start with Biocon. Now, that one is in focus because Morgan Stanley has written a note on it. And they take notice of the fact that the company, Mylan, has received a marketing authorization for one of its drug, which is Hulio, by a European Commission. Now, remember, the market size for this particular drug in the European Union is expected to be around $4 billion. And given the fact that Biocon's profit share for this particular product works out at around 17%, they stand to gain, and that's the reason the stock is moving higher. Moving on to Asian Paints, wherein the company has expanded their production capacity. So they have commenced the commercial production of paints and intermediaries at the Mysuru plant. Remember, the capacity of this particular facility is 3 lakh kiloliters per annum. This is what the management told us at the end of Q1 as well. So given the fact that the commencement has happened as per schedule, and given the fact that capacity utilization was 75% already, this comes as a bit of breather. And lastly, on Max Group of stocks, wherein KKR-backed Radiant Hospital has bought around 50% stake in Max India's subsidiary Max Life. They have bought it at a price of 80 rupee per share, and it will be used by the company to cut down their debt and also fund growth. Back to you.
Okay, all right, Anisha, thanks so much for that. Well, Graphite India started off on the back foot. Remember, on Wednesday's trading session as well, the stock ended at the low point of the day with a cut of around 3.5%. In today's trading session, it's recovered close to around 5% from the low point of the day. I'll tell you why. On Wednesday, in fact, the street was nervous because the Karnataka Pollution Board had revisited Graphite's Bengaluru unit. Now, on the back of that, there was some nervousness, but to tell our viewers, this case dates back to 2012. At that point of time, the Karnataka Pollution Board said you have to shut down this unit, and then Graphite India appealed and they got a stay order out there. Now, why is this unit so important? If you're taking a look at the total capacity domestically, it's around 80,000 tons, very, very roughly. Now, international capacity of theirs is around 18,000 tons. So if you're looking at it, you'll say, well, Bengaluru is a large facility. It has nearly around 13%. So close to 13% of their total production goes out of the window. That's not really the case, because if you look at the numbers very, very closely, then that's telling you that the Bengaluru unit basically deals with the graphitization. There are 6 stages when you're making graphite electrodes. And graphitization is the last process really that comes in there, because the Nasik and the Bengaluru unit, they do work in tandem. Now, if the Bengaluru unit, does shut down, that's the worst case scenario that can play out, then the company will have to start this graphitization process at Nasik instead of Bengaluru. Currently, the Nasik unit is shut, so obviously there will be some costs that will come about. And the bigger cost difference is the power cost. In Nasik, the power cost is much more in comparison to Bengaluru, and that's why they're doing graphitization in the Bengaluru unit. Brokerages, they say that in fact volumes will not get impacted whatsoever. It'll just be that the graphitization will have to be done in Nasik instead of Bengaluru, and that will increase cost, but it can hit the EBITDA by only around 0.5%, and that's why Jeffrey, they maintain their buy rating on the stock with the target price of 1,415 odd. But let's do a quick recap then of all the top buzzing stocks that we have, and we have just covered. Let's get them up. We have Yes Bank, ILNFS Group stocks like ILNFS Engineering, ILNFS Investment Managers, United Spirits, Hindalco, Vedanta, Nalco, Jet Airways, Biocon, Max India, Asian Paints, and Graphite India. Talk on our radar. Remember, the company has completed phase 1 and has started commercial production at one of their facilities in Andhra Pradesh. Remember, the capacity of phase 1 at Andhra Pradesh is roughly around 18,000 tons on a per annum basis. Mr. Deepak, the managing director of the company, joins us to fill us in with all those details. Hi, Mr. Deepak. Thanks so much, sir, for joining in. Well, this 18,000 is the capacity that you're adding. What is your current capacity that you have? And this 18,000, how does it ramp up? Phase-wise, by the end of this year, what should the capacity utilization look like?
Sure. So if we were to look at the existing plants, we have, as you mentioned, 100,000 tons of capacity. And as of now, that capacity is more than 90% in terms of utilization. So the market is quite strong and we're quite bullish on the market going forward. This additional 18,000 tons, which is phase one of the new greenfield plant that we commissioned yesterday, we actually expect a fairly aggressive ramp up where we expect that we will be at about 70% or so capacity utilization by the end of this current financial year. So that's quite good news for us as well as in terms of the overall market and our customers that we supply to. And this plant is actually a state-of-the-art plant using technology from Japan, US, Germany, Denmark, and even some extremely innovative solutions from right here in our backyard in India.
So Deepak, you're quite confident that in FY20, that's the next financial year, this additional capacity will also be operating at 90% roughly. And how much can it contribute on an annual basis, this incremental capacity?
Yes, I believe, I think in the next year, we should be able to get this ramped up towards that 90% mark as well. And that's what we are working towards. And we're quite confident that that would likely happen.
And how much can it add to your revenues?
In terms of revenues, we expect that this plant will be adding about 150 crores or so in terms of revenue for this phase one.
Phase one. All right. And what about phase two? You have plans out there as well. What is the total capacity you're looking to add in phase two? And what is the capex that you work with to add maybe 10,000 tons, or you could give us a ballpark number?
Sure. So for this 18,000 tons that we just added, the total capex was 79 crores. And phase two, we are adding 3,500 tons a month, which translates to 42,000 tons a year, which is an expense on the capital side of 153 crores.
Okay. And so what is the current debt and how would the debt look like post all this, all these investments that you're making, and any plans to bring it down?
So currently, if you would look at our FY18 balance sheet, our debt that we had was about 67 crores in working capital and about 30 crores as a term loan. So we are taking on a little bit of debt in order to finance these projects, and at the same time, we're also evaluating the possibility of bringing in equity in the form of either QIP or a PIPE in order to manage these projects as well.
All right. So out of the 150 crores of capex that you have for this 42,000 tons is right to come on stream, what would be the split? How much could be debt? Will it be 50-50, equity and debt?
So I think that's still being evaluated right now. It would depend on what final decision that we would take about whether we choose to do a further equity issue or not. So it would depend heavily on that. However, we should be making a decision on that in the next few months.
You do not have an enabling resolution for a fundraise right now?
We do. We actually have that approved in our AGM, which was completed about a month ago. So the enabling resolution does exist. All
right, let's get to some numbers then. Your first quarter was very good. You had done a growth of already, I think, 30-35% odd. Give us some guidance. For FY19, what kind of a revenue growth are you looking at? You're doing margins of around 10.3%. Is that sustainable? And also give us an outlook. What's your target in FY20 in terms of revenues as well as margins?
Sure. So if we look at the what Q1 looked like, as you mentioned, we had about a 35-36% growth in Q1, and this is coming off the back of FY18, which was a 30% growth over the previous year. Okay. So, and what we're seeing that momentum continue now into Q2, in spite of what I would say might be distractions when people talk about axle loading in commercial vehicles. We're seeing a very, very strong demand for our products, at least in the commercial vehicle segment. We're seeing very strong demand in the tractor segment. We're seeing the railway segment also has very strong, and our exports are also growing very strong. So all of our segments seem to be growing very strong, and so we expect this similar kind of momentum in terms of something around that.
So your FY19 revenue?
Mark. So what we're projecting might be somewhere that would be a growth of 25-30% or so.
25%. All right. And margins of 10.5%, that's doable?
You can hold on? So it looks like these margins look stable. I think It would depend a little bit on raw material prices and the volatility that is there.
Okay.
But the margins do look to be stable at this point.
Just one final question then. You have a fair amount of exports. Has there been any benefit of rupee depreciation? And secondly, generally, the cost of raw material has been going up. So for your company in particular, if you could tell us how much higher is the cost of raw material today compared to last year?
Sure. So if you were to, as the first question you asked was regarding the rupee depreciation.
Yeah.
So we do export a reasonable amount. Our exports last year were at about 8%. And that is continuing to grow as well in terms of the total value.
Okay.
So we are seeing some benefits that do come out of the rupee depreciation in terms of the realizations on these exports. In terms of the raw material prices, we have a mechanism with our customers where we do pass on, albeit at a slight lag of a quarter, we do pass on the increases in the raw materials. Our primary raw material is steel scrap, and compared to a year and a half ago, I would say there's about a 50% increase in these steel scrap prices.
Right. And you told us that 8% of your top line is exports. How much of your raw material is imported?
So it's less than 1%.
Less than 1%. All right. Thanks so much, Mr. Deepak, for joining in. All the best for the remainder of this year.